Welcome back to Grown Quality. My name is Elian, and in this video, we will be going through Robinhood, the trading platform for retail and traders who are, ranging from starting investors all the way up to increasingly more sophisticated investors. So, let's see what this company does, how it operates, how the growth is going, and how future prospects are. Let's just dive straight into it. Okay, so before looking at the company's growth, we have to see what the company does and the products the company is offering. So, Robinhood offers a variety of financial instruments or financial products ranging from the brokerage to crypto to Robinhood Gold, a subscription membership, the Robinhood wallet, and the credit card, cash cards, and spending accounts. Now, all of these are labeled under the Robinhood brand and try to increase the network effects the company is trying to establish. So let's look at the growth and the financial results the company has been posting over the last years in order to see how that is going. Okay, so let's start off by looking at the balance sheet, and I have already marked one of the parts that is standing out here, and that is the assets related to user cryptocurrencies safeguard obligations. So basically, what this is the cryptocurrencies that are held on the platform, and that is in the safeguard or custody of Robinhood. Now, this is seen as increasing quite a bit year over year with the year ending 2023. But this is also something that we see a bit of an issue with this company brewing. And I will highlight it further later on, but this is something to remember. The cryptocurrencies under safeguard, and especially the amount ending for the quarter ending 2023, as they were then holding $14.7 billion worth of cryptocurrencies. Now, if we continue to the income statement, I have highlighted two segments, and that is the net interest revenues, the lower one, and that is increasing slightly, and this comes mostly from the cash sweeps of the company. But we also have transaction based revenues, and we actually can see this going down. Now, 2021 was a bit of an anomaly because then we had the COVID bubble, and every trader was using Robinhood. So in 2022, of course, this dropped off quite significantly. And starting 2023, when we were still for the first 3 months in that bear market, it still hasn't quite recovered. Now, once again, net interest revenues has, but that is also due to the immense increase in interest rates and therefore having better spreads on the cash sweep, the amount of interest they give towards their customers and the amount of interest that is paid. Now, if we look further, we can see the operating expenses. And what we can see here is that marketing has decreased quite a bit from 2021, and technology and development as well. Now, last Friday, I released a video going over my Q1 revenue or earnings review of Robinhood. And in this, we could see that general and administrative expenses were even down way more year over year. They cut this by 80%, but this was mostly due to a reduction in stock based compensation, namely from the founders' compensation package. Still, a very good thing though that that was cancelled because that was an immense expense for the company. But let's continue. Because what we have here is a slide from additional information given during the last earnings release. So for the Q1 2024 earnings release, and the previous two slides were Q4 23. So that's a bit of a change there, keep that in mind. But what we can see here is that total net revenues, well, after coming down from 2021, of course, because that was the depth, or well, in the beginning of 2021 was the peak of retail investors' euphoria. And then 2022 and 2023 were, of course, a lot worse. Q2, 3, and 4 of 2023 is a different story, of course, but Q1 was still a bad quarter. Now, what I want to highlight here is that we can see that the total net revenues have been increasing from Q1 2023. Why do I take this quarter? Well, I could also take it a year earlier, but Q1 2023 is where the company, in my opinion, mostly stabilized and started growing again. And as I just mentioned, the beginning of the problems or the brewing problem with Robinhood, it becomes visible here because if we take the third line, we can see that that is crypto revenues. So that is transaction-based revenues from crypto. And if we look at it all throughout 2023, we can see that they have 38 million, 31 million, 23 million, and then in Q4 they all of a sudden jump to 43 million, and then in Q1 they jump to 126 million. Now, that is of course a huge jump, and that is something that I want you to keep in mind when we get to my conclusion, where I give my final thoughts about this company. Another thing we can look at is the net interest revenues. So that's the third line from the bottom of the revenues lines. And we can see that ever since Q1 2022, this has been going up. So you can see this steadily increasing every quarter as the Federal Reserve has started increasing interest rates. Now, I think that's another issue you have to look at when you are evaluating Robinhood, because those interest rates can't stay this high forever. They will probably come down. In fact, we know that investors are screaming for them to get down because they want them lower for companies to be more profitable. Well, maybe for Robinhood that's not specifically the case. But let's go on and look at their KPIs because there we may get a different picture. And why do I say that we might get a different picture here? Well, that is because in the previous slide, I think that the revenue showed that it was heavily dependent, or Robinhood was heavily dependent on both cryptocurrencies, which have been in a huge boom cycle, and on the interest rates, but they are coming down. So, what other things do we want to look at? Well, if we look at the funded customers, we can see that they are actually increasing, and they increased from 2021 to 22, something I personally didn't expect when I first looked at Robinhood, but they did, and I find that highly positive. The assets under custody, they are increasing as well. They went down from 21 to 22. Of course, this is in line with what I expected, but I'm going to say they close to doubled from 22 to 23. Now, this can be explained by both the markets going up, but also due to inflows into the platform. Now we have net deposits, and this is, well, we could say at the lowest, but of course, this is also a bit of having a lot of retail investors already with the platform, and we have heard in earnings calls that they are now going after different customers. Well, they are not specifically going after different customers, but different customers are joining Robinhood. And we can see that ARPU, average revenue per user, is going up as well from 2022 to 23. And that's a huge positive. And that's where I meant to say that this may paint a different picture, because we can see that they are actually making more money per customers. Now they also have the Robinhood Gold membership, and we know, at least Vlad, the CEO, Vlad Tenev, said that they are making multiples of, well, average revenue per user for people with the Gold membership compared to regular Robinhood customers. So they are really pushing that, and they see great success with that. But of course, growing that takes time. Okay, so like I already said, they are increasing their assets under custody. And I went ahead and say that they almost doubled it. Well, of course, it's more likely to be at around 80% from top of my head. But what we can see here is how that number breaks down. So we can see that the equities, well, they increased that by quite a bit, and cryptocurrencies as well, but maybe not as much as you would have thought. Now then we see the options. I don't think that's particularly interesting. But then cash held by customers, well, that is interesting, because we just saw that the revenues from cash or from interest, that's quite a big portion of the earnings of the business. And as customers are holding more cash, Robinhood can profit from the cash sweep or the spread in interest they offer on the cash sweep, which is their. Well, let's explain it this way. If you store cash on Robinhood, you get interest paid on it. That is because Robinhood pushes that money to partner banks every day and gets paid interest on it every day. Now, you will receive it at the end of the month, but Robinhood gets it every day. And there's a difference between the interest rate gets paid and the interest they pay you. Now, that difference is the spread, and this is what they can realize on their revenues for interest income. And having more cash on the platform means that they can earn more on that spread. So, seeing cash held by customers double, that's of course one due to the increased interest rates, which makes that, well, interesting. But it's also very positive for the business because, once again, they can profit from those spreads. Okay, so then we get to my bull argument. And for my bull argument, I'm going to give you one here. If you want more bull arguments regarding Robinhood, you will have to go to my own analysis on my website, and that is linked down below. There you can find it. It's the first link you will see. And once again, I will give more bull arguments, more bear arguments. It's a more comprehensive and complete analysis there. I also go over the executives, for example. Do a very simple analysis of some of the competitors Robinhood is facing. It's a more complete analysis there. It's more complete than I can push here in the video. But for my bull analysis, I see the company taking market share. And this is also what Danev said in his last earnings report or the last earnings call. They are taking double digit market share from competitors. They see net inflows from all of their competitors. This is, of course, extremely bullish because that means that they are not only taking market share or increasing it due to new customers coming into investing and joining with Robinhood. No, they are actively taking existing investors and taking the money they have at other platforms and getting those as extra inflows into Robinhood. That's that's a huge positive, of course. And these are also different customers. They also explained that. And what is typical about these customers is that they hold a lot more capital. They bring in way more capital into the platform than the new customers do. And that's somewhat logical. But it's also very good to see because that means that people are trusting Robinhood. Now, let's continue with the bear argument because that's also quite something. And if I've told you that, I will give you my conclusion about Robinhood and whether I see it as a good company or maybe not. Let's continue. So, my bear argument might be somewhat of controversial because after the last earnings report, it became clear that there was an issue. The stock initially popped 10%, sold off to minus 3% the same day, a 30% swing, and then continued to be lower by another 6% the next day. Now, Robinhood was not helped on that second day with the macro environment because there was also some bad economic data coming out. But it is a 20% swing basically. And that's not good. Then there is something there. And what I think that is that Wall Street isn't trusting the earnings. And if you look at that crypto revenue, you may see why. I mean, the last earnings report was just blowout earnings. They just smashed it. EPS expectations were 6 cents. They came in with 18 cents. I mean, if you want more earnings data of the last earnings release, go to my last video. It goes over the Q1 24 earnings of Robinhood, and they were great. I cannot say anything different. They were absolutely great. But they have investors, and mostly Wall Street, wondering if it's sustainable. And I wonder the same thing. Because we know that crypto is a boom and bust product, a boom and bust asset class. It shoots up one day, maybe one quarter, and then drops off the next. It's not really evenly growing. So when crypto dies, those revenue go down the sink as well. We saw it. They just came from 20 something million in Q3 23 to 126 million, I believe, in Q1 24. That's a huge difference. And once crypto will go down, those revenues will go down as well. And that's not to speak of the interest revenue, because what happens when interest rates go down? Will the interest revenue stay the same, or will that go down as well? Those are all questions that have to be answered for the current valuation to make sense. And that brings me to my conclusion. Because what we have here is a company that is actually growing a moat, in my opinion. They are growing network effects because every new investor, well, not every new investor, of course, but a lot of new investors will opt in with Robinhood. It basically became synonymous with the retail investor. It is the go-to platform. And you can see that even going from 21 to 22, when the markets were in the gutter, they increased active and funded accounts. And that's a huge positive. I cannot say it any different. People are going for Robinhood. They see inflows from every competitor, net inflows. They are stealing customers from every competitor. And what they do is try to increase the product to service more and more upmarket investors, more sophisticated investors. They try to win them over for Robinhood. They will be launching new products, new platforms, because they are going to improve their desktop active trading platform. They mentioned that it is not up to standard for what they want to service and what they want to have as a standard. They are going to work at it. They mentioned this. And by saying they mentioned this, I mean that Vlad Tenev, the CEO, said this in an interview with Amir, the YouTuber. They are doing a lot to innovate. And instead of taking on just the beginning investor and then everybody going to TD Ameritrade like in 2021, they are now implementing steps to keep those customers. They canceled the founder reward, which was an incredible sum and very dilutive to shareholders. They are not only becoming a better platform, but a better company for investors as well. They are maturing as a business at a rapid pace, and that is hugely positive. So, do I like this company? I like the way they are going. I don't know whether I see value in the current valuation, because there are a lot of question marks surrounding this business. But I do really like the way they are going and the direction they are going, because they are trying to execute at a really high level and they are succeeding. If you are curious and want to know more about Robinhood, check the link in the description down below, because there will be my full analysis of this business. But for now, this was it. If you have enjoyed this video, please like and subscribe, and I hope to see you next one. Bye.